Today I'm looking at Arcelor-Mittal, one of the largest steel companies in the world, and stress testing the assumptions. So I've taken the long carbon steel price down from the Trefis assumption by about 10% before a gradual recovery. I've done the same thing with the volume of shipments, and I've done that because Europe is still in a quasi-depression. And though analysts are predicting growth for next year in Europe, we know that economic forecasts make weather forecasts look respectable, as the saying goes. So we're stress testing those assumptions and seeing if the intrinsic value per share holds up under those stress tested assumptions. If I look at the Asia-Africa division, I've done the same thing with the steel price and the steel shipments. Again, roughly 10% decline before a gradual resumption and return to present volume of shipments. You can see that with the price, I've taken it up so gradually that it amounts to a virtual flat line of no growth for the next 6 years, which is a pretty punishing assumption. So I think that this is conservative enough. And also, Mittal's weighted average cost of capital, which is used as the discount rate, I would say is sufficiently high and conservative at 13%, which punishes this present value per share and adequately reflects the risks of Mittal as a cyclical company. Now, with all that stress testing, we get this 13.65 intrinsic value per share, which is still well above the market price. One thing to be aware of with Mittal is it has a high level of debt, $34 billion in net debt, $22 per share. And so it's a highly leveraged company, financially leveraged, and it has a lot of operating leverage as well. So it's not for the faint of heart, but I believe that Arcelor-Mittal has enough free cash flow to handle its level of debt, and in fact its free cash flow has been positive over the past 2 years while the net income has been negative, which I think often spells a good opportunity. On an accounting basis, the company is looking unprofitable. In reality, on a real money basis with free cash flow, it is profitable. So again, stress tested assumption is $13.65 above the market price of $12.23. I think Arcelor-Mittal is a bargain at this price. Thanks for listening. This is James Berman with the Berman Value Folio.